Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay, what's the second best? There is no second best.
That's Michael Saylor, the founder of tech company MicroStrategy, which has been buying up billions of dollars worth of Bitcoin in one of the biggest bets of all time for any publicly traded company in history. As Saylor has amassed $14 billion in profit and counting by betting on Bitcoin's price to climb. But as MicroStrategy continues raising more money from investors to buy more Bitcoin, more people are raising alarm bells that this could all end very badly.
If in fact Bitcoin goes down, this becomes a much more complicated situation.
So how will MicroStrategy's big Bitcoin bet end? And is it creating another massive Bitcoin bubble? In order to dig into MicroStrategy's Bitcoin bet, let's start by acknowledging that it's not too different from Bitcoin arbitrage bets of the past. People in the past, whether SBF or others, have always realized that there are plenty of ways to lever up in up cycles when Bitcoin looks poised to rally. And perhaps the reason why so many people are worried now is because those bets historically haven't ended well. For example, in 2021, billions began pouring into the so-called Widowmaker trade, where people would buy shares in the Grayscale Bitcoin Trust when it traded at a premium to the amount of Bitcoin it actually held. People then borrowed against that position since the shares they held were technically worth more than the Bitcoin Grayscale was entitling them to. And it made them a lot of money. But eventually that premium flipped to a discount, and everyone who had bet the good times would continue absolutely blew up, with Three Arrows Capital, BlockFi, Genesis all going bankrupt.
Genesis had a $2.3 billion loan to the now bankrupt hedge fund Three Arrows Capital. It stopped issuing new loans and halted customer withdrawals back in November.
At least on paper, what MicroStrategy is doing is effectively very similar, with a little bit of a twist. This time, rather than getting exposure to a Bitcoin premium through a closed-end fund like Grayscale's Bitcoin Trust, investors are rushing to play that premium through MicroStrategy bonds and stocks. Because not only does MicroStrategy own more Bitcoin than any other publicly traded company in the world, it also recently signaled it was prepared to buy a lot more.
The company is targeting to raise $42 billion of capital, comprised of $21 billion of equity capital and $21 billion of fixed income capital, primarily for the purpose of acquiring Bitcoin.
And this is the most interesting thing about what's currently happening with MicroStrategy. They are opening a levered Bitcoin play to bond investors who historically would never get access to a levered Bitcoin play. These are investors who are usually resigned to losing about 5% a year. In fact, Saylor recently pointed that out in one of his more recent talks to investors.
Every bank in the U.S. is capitalized on bonds. Every operating company is capitalized on bonds. You wonder why the banks are sick? You wonder why the operating companies are sick? They're sitting on those minus 5% instruments, and that's their best idea.
Now, this metaphor might be a stretch, but by letting bond investors in on the upside to Bitcoin, Saylor is essentially offering Diet Coke addicts the opportunity to taste a teensy bit of heroin. And it seems as if the market is now fully addicted. So far in 2024, they've lent him billions of dollars at a 0% interest rate. But let me be very clear, these very much are not heroin addicts getting hooked. These are some of the world's largest investors, like Germany's largest insurer, Allianz. So what Michael Saylor is selling them must be good stuff, like really good stuff. And let me explain this in the simplest of terms, because weirdly, it really is this simple. Let's say MicroStrategy wanted to borrow $100. The lender might ask what interest rate they'd get. Saylor would say 0%. And the lender might say, why would I give you $100 then? And Saylor would say, I can pay you back even more than what you'd earn in interest. I'll pay you back by letting you convert your bond into MicroStrategy shares. That $100 could turn into $200 or $500, and you can't get a return like that in bonds anywhere else right now. They might say, well, has this worked in the past? And Saylor would say to them, I've been doing this for years, and look at our stock. It's up almost 500% this year. And that's how Saylor has gotten bond traders hooked. Convertible debt offerings are a hell of a drug, so long as Bitcoin's price continues to go higher. But what if it doesn't? Well, if you ask Saylor, it always will go higher.
It's consistently winning, and at some point, if you look at the numbers, you start to wonder, well, why is it winning, and is this a fluke? And the irony, of course, is that you still get questions from the normies every day like, well, when does the run stop? It's like, when do nuclear reactors stop producing more electricity than water wheels? You know, when does the airplane stop flying faster than the donkey cart? The answer is it's not going to stop, because it's structural and technical.
And if you're a Bitcoiner, that might be true. But if you're not, at least in theory, there will be some impacts here. Mainly, Bitcoin's price falling will also hurt MicroStrategy's stock price. Right now, it owns about $30 billion worth of Bitcoin, but the market is valuing the company at more than $100 billion. If Bitcoin's price declines, MicroStrategy's stock is likely to also drop significantly. But that wouldn't spell disaster by itself. The company could always sell its Bitcoin, though it's unlikely Saylor would ever do that.
If in fact there was a retracement from 98,000 to, I don't know, 70,000, what happens?
I'll make 2 points. 1 point, participants in the market are buying Bitcoin 20x faster than the supply is coming from the miners. There's a major demand supply imbalance, and that's going to continue for the foreseeable future. So I don't really expect that, but let's say it did happen. MicroStrategy's business is so good, we're generating 1 times the capital we raised. When we raised $10 billion in capital, if Bitcoin traded down $20,000 like you described, we'd still make $10 billion off the arbitrage by selling the volatility. If it trades up like I expect it will, we make 10x that. So we're either making $3 billion on that convertible bond this week, in the worst case when it trades down, or we're making $30 billion on that convertible bond if it trades like the Bitcoiners believe it will.
So I will just say this. Coinage got our start covering Terra's $40 billion collapse back in 2022. And back then, Terra defended its sustainability by looking back and pointing to the exponential run-up of its token. That, however, fell off a cliff and collapsed to $0 because no one wanted to hold it. And I'm not saying the same thing could happen to MicroStrategy, because no one might want to hold MicroStrategy stock, but it is basically a levered bet on Bitcoin. There will likely come a time when holding MicroStrategy stock gets less and less attractive. And the reason why it's rallied so much will be the same reason why it will fall just as fast. It's, after all, a levered bet on Bitcoin. But until the music stops, it's still a wonderful time in crypto land. I'm Zach Guzman. This is Coinage. Stay safe out there.